Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Happy Friday. Hope you guys are doing fantastic. Well, interest rates are doing pretty good. They finished the week better than where they ended last week, so that's good. We had very little economic data in terms of actual numbers. The real major piece of numbers is we just saw initial jobless claims come in for the week, and we see that every week, and it came in a little bit better than what the market was expecting. Fewer jobless claims numbers, but nothing really big, so it didn't really surprise the market. The market was just really waiting for the release of the Federal Reserve minutes. Now, the Federal Reserve met a couple of weeks ago. No big surprises there. Quantitative easing, was continuing, or the tapering of the quantitative easing was continuing to happen. But the market was really wanting to know, okay, what's going to happen with this last $35 billion? How is the Federal Reserve going to actually taper this? Because there were two questions. They could continue on the path of just doing 10 billion, 10 billion, 10 billion, and then another 5, or would they do 10 billion, 10 billion, and then take the one last chunk of 15 billion to end quantitative easing and end the purchases of mortgage-backed securities and treasuries? And the minutes were released, and it was decided that the Federal Reserve will end the quantitative easing sooner rather than later. So if they did the 10, 10, 10, 5, that would have ended it in December. They're going to do 10, 10, 10, 15, 10, 10, 15. It's going to end in October. So now we know when the quantitative easing will end. What we also know is that over the last two times when, quantitative easing 1 and 2, when those ended, that actually helped interest rates. Interest rates in the stock market move typically conversely. When stocks do well, interest rates do poorly, usually. And when interest rates do well, stocks usually do poorly. So what we've seen happen over the first two end of quantitative easings is actually stocks got killed and interest rates improved. And so if history is any predictor of future results, we might see that again. And actually, after the news was released, we did see the stock market suffer slightly, and that's why we're seeing interest rates a little bit better this week, even on the heels of a stronger, on the surface, employment numbers that we saw on Friday that we talked about. We did see interest rates improve a little bit this week, so it's very possible that over the next few months, or maybe into November, December, we might see interest rates even be a little bit better than where they are today. Anything can happen, but that could be how this plays out if it plays out like it did with QE1 and QE2. So that's what's going on with interest rates. As always, we'll keep you informed. I hope you have a very wonderful weekend. Now that the 4th of July weekend is over, I'm sure that we'll maybe see some more activity here in the purchase market with people getting back out there, trying to get a home before the summer ends. So we'll probably see that last push. So if you have any questions, please feel free to give me a call. And if you're working this weekend, so are we. If you need someone that needs to be pre-qualified or get a letter out, give us a call. Let us know. We'd be happy to help. Thanks for joining me with Java with Jared. We'll talk to you next week. Bye-bye.